Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have a live trading room open to weekly strategy roundtable where we talk about current market conditions, NVIDIA, Palantir, AI stocks, current pullback, unemployment data, and what to expect short-term and long-term. Right, some of the opportunities in the market, some of the recent trades. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. Renato, welcome back. This is my brief bio. Disclosures are important. I'm going to go to specific trades, so it's important to understand the risk associated with trading stock options. I encourage you to visit the link if this is the first time you see this screen. And you can pause the screen if you need more time to read the disclosures. All right. Before we get into portfolio allocation, let's talk about current market conditions. All right, so what happened? So today, kind of good news is bad for the market, right? More jobs creation than anticipated, healthy employment, everybody's working, Delta Airline is up 10%, and that's not good for interest rates, right? The 10-year was as high as 480, almost 480, pulled back now. So 10-year yield jump, meaning that people think that there'll be less interest rate cuts, but more importantly, they're factoring that Fed will pivot and start raising rates, right? Because 2-year yield is at 434, and Fed already cut to 4, right? Or 4.25, I think, the Fed rate. So we went from 5, right? 2-year yield was at 5. And now it's at 434 after 100 basis point cuts, right? So in theory we should be at 4, but in reality we're at 440, right? And potentially grinding higher toward 5%, like 10-year or 5-year. So that means that people are already thinking about rate, new rate hikes, and that's probably overreaction. But meanwhile, market is reacting to geopolitical economical news, right? So employment is strong, rates are up. Next week we have CPI, PPI data, Tuesday and Wednesday. If inflation jumps, okay, rates will go to 5%, right? They're at 4.8. If PPI is, what's the expectation? CPI, core CPI 2.7, right? If it jumps to 3.3 or year over year from 3.3 jumps to 3.7, then interest rates will be at 10%, right? The 10-year yield will be at close to 5%, which would be the highest it's been since 23. And dollar was already at 110 today, so dollar will continue to rally. So that's the headwind. The short-term uncertainty about the new administration and their policies on immigration and tariffs causing the market to be, market doesn't like uncertainty, right? And we definitely have uncertainty about, whether Canada is going to be part of the United States, or China will have 60% new tariffs, or if they're going to be a massive deportation, right? And since nobody knows for sure, right? Some people laugh, some people take it seriously. That means that the market is going to continue to be vulnerable. And QQQ already reached 500, 503. So in the live trading room, I have that slide basically saying that if you look at the gamma exposure, right, and open interest, right, I'm looking at the call, gamma, and open interest. So the highest open interest right now is at 500 level. That means people are buying puts and they're hedged, right? But then next week we have expiration where all of that gamma, all of these positioning are going to be gone. And nobody's putting position yet into February, small amounts, relatively small amounts. So if we break through 500 level, you don't, and that's the July high, you really don't have any hedges, right? So you could expect a quick move to the 480, right? And this is probably going to be contingent on CPI, PPI data at this point, and which is Tuesday and Wednesday, and then we have earnings season, right? If the earnings are going to look like Delta Airline, well, then this is overreaction, right? Because economy is strong, people are flying, right? So then, if people are flying and domestic flights are, you can't get the tickets, you know, international flights, you can't get the tickets. People buy them on credit cards and they travel, and, you know, consumer services are 75% of the economy. So that's kind of the current state of the the reaction to the news. So, okay, what do we do, right? So on one hand, interest rates can go to 5, which I think will accelerate the market pullback. Or dollar is going to grow to, well, there is no overhead resistance on dollar. Dollar is kind of next level is 114. That's the peak of the recession, right? Peak of the market reached its lowest in October of 22 at dollar 114, 113, 114. So, and you know, we're at 110, so we can, you know, that's the next level. So that obviously, you know, we're not deep in recession or fears of recession. So one could argue that this is a little bit overdone, but you know, that doesn't mean it can continue going higher. VIX is at 20, so no panic yet. Anything above below 20, there is no panic. Next week we do have expiration, and all these peaks, right? All these peaks are happening on these Wednesdays of expiration. So you just have to be careful that right after these Wednesday's expiration, you do have peaks of volatility, because you have VIX January VIX position expires on Wednesday. We have beginning of the earnings season, and so we'll see. Questions? All right, so VIX is at 20 for now. Value stocks actually started to pull back. You know, it wasn't pulling back when I was doing the live training room, but now it is pulling back. So the value stocks are back to the 168 level. And QQQ is trying to hold, looks like we have a sharp reversal. Yeah, we're at 5, not sharp, but 1%, I mean, close to 1%, 504 to 509. So 1% reversal, we'll see. But you had a sharp pullback, and this is the gravity of these strikes. Right? When you have a lot of position, dealers have to hedge, right? So it kind of uses as a gravitational force to hit 500, then bounce back. So now we're going to be bouncing between 505 and 500. Well, 510, sorry, 510, right? That's the highest position. So 510 and 500, we're going to be ping ball between 500 and 510. I would, if you're day trading, I would be buyer at 500, seller at 510 for now. If you're doing short-term day trading. Questions. All right, so QQQ, what else do we need to talk about? Small caps, right? Interest sensitive stocks like small caps, regional banks are innovation beating the market to the downside. Looks like small caps were making new 2025 low, probably December low, right? So pretty vulnerable, but you know, not below it's still holding 200-day moving average. For small caps, 200-day moving average has been a strong support. And our favorite, Bitcoin. As long as Bitcoin is below 100,000, also making new lows, right? Bitcoin just, you know, pierced through 50-day moving average 1, twice, you know, 4 times. Again, sitting on a very important level, whether it's QQQ 500, S&P 480, you know, Bitcoin 90,000, all very vulnerable levels. Crude oil continues to rally. People, you know, seasonality. Crude oil was oversold, and you do have a strong rally in crude oil. And then what else? NVIDIA is under pressure. It broke to the 140, high open interest at 140, 50-day moving average. Back to, you have support 135, 120, right? Same thing for NVIDIA. You know, 125, 130. So we kind of got close to 130, and you know, that's where the lows are. and support. So that's NVIDIA. What else is interesting? Tesla is actually not making new lows. Bounce back 377, so as low as 377. So kind of held that support. Okay. Any questions? All right, so usually, so going into January, February, right? We can go back to QQQ. Not QQQ, spiders. Let's do spiders. Let's take out January 13. I would even take out January 17. Let's do February and March, right? Because January 17 is next week, expiration. So what do we have? IV percentile, 94, so a lot elevated, right? So we're elevated volatility. This is where you want to start selling premium or thinking about selling premium. But one standard deviation and we're down, doesn't even show you the strikes. Let's see. So one standard deviation, you see gamma 550. So now people are positioning at 550, 570, right? So on the downside, we could be at 550, 565. 565 is a strong support. That's 570, 565 is this level, right? 565 is this breakout and close to 200-day moving average. So 560, 565 is the next level that people are hedging, right? If the 580 doesn't hold, right? If 580 doesn't hold, then you have 570. I mean, largest one is 550. And one standard deviation, so let's call it 565. So let's do this. I'm gonna do 50-day moving average and this. So on the downside, 20 points to the downside, right? Or one standard deviation, 20 points to the upside, right? Close to all-time high, right? So one case scenario that we're gonna move beyond one standard deviation, right? Delta Airline today had great earnings, so they moved 2 standard deviation, right? They don't usually, last 3 quarters, they haven't moved more than 4%, but, or last 4 quarters, they haven't moved more than 8%. Today, they were up as much as 12%. So scenario number 1 is that just like Delta Airlines, you know, the rest of the S&P 500 companies will report stronger than expected earnings. People are traveling, spending money. AI is improving the productivity and, you know, and the bottom line of most of the companies. And, you know, we're at 1, right? We're at 620, 630, right? Scenario number 2, not so fast, right? We have new administration. Nobody knows about the tariffs. Nobody knows about immigration, what the new policies will be, and we're just going to be, you know, choppy market, right? You know, we'll reach 560, we'll get to 600, we'll reach 560, maybe multiple times between now and, you know, Q1. And then scenario number 3, signs of either recession where unemployment drops, which is, you know, kind of after today's spring probably less likely, but inflation, right? If people are flying, spending money, you don't have, people are not building new houses, right? Housing is down. No, you know, construction is down, you know, permits are down, housing is cooling, and all of a sudden prices of rent skyrocket. Then you have signs of recession. Oh, that is hyperinflation, or inflation is back, right? Because interest rates are jumping because they expect that immigration policies will change, tariff policies will change, and that will cause stagflation or popular word, but, you know, jump in, you know, inflation. Right, and we're going to, well, after 560, 540. 540 or March lows is this guy. Most likely somewhere in this area. All right, so, you know, you could, I mean, right now we're down 5%, right? We could be down another 10%, right? Or we could be down 15%, right? 15, 20%. Right, 600 to 520 is what? 15%. Something like that, yeah. So how many of you say it's one? You know, this is all overdone. You know, Elon Musk and Trump are capitalists, and they don't want the market to go down. So they're gonna do, you know, deregulation, efficiencies in government, and all that good stuff, and we're going higher. Number two, inflation is a concern. Tariffs are a concern. Immigration policy a concern. So we're trading in two, but the economy is still strong, right? And there's no signs of recession or elevated inflation. So we're choppy market, just trading in two because of the uncertainty. Or scenario three, we actually have signs like Trump actually comes out and says, yes, you know, it's going to be 60% or 40% on China and 20% on Canada and Mexico. And we're gonna, you know, take over Greenland and rename Gulf of Mexico to Gulf of America. And then we have three. Okay, so how many of you say one? Months higher or lower? Christopher, what is your thoughts on 10-year yield over the next months, higher or lower? I mean, my thoughts, it's extremely overdone. And from technical point perspective, it should come back and market should start the rally. But, you know, it depends on the macroeconomic data, right? I think inflation is not going to jump next week, right? Because, you know, I'm not sure why it would jump now. Nothing really has changed, and there is no new policies in the effect. So yield should pull back, but that doesn't mean it cannot jump to 5 and then pull back, right? So that's what I don't know. Is that, but for now, trade what you see. We did break 470. As long as the yield above 470, we're going to 5, right? The path of least resistance is to go to 5. Just because we're overbought, that doesn't mean we cannot hit 5. So as long as the rates are above 4.7, and they're not gonna, if they don't drop next week on the CPI print and earnings from banks, then we're going to 5, right? But it is overbought. But you know, market can stay rational. What's the Buffett saying? Market can stay irrational longer than you can be solvent. So just keep in mind that just because it's overbought, that doesn't mean it cannot go to 5. And right now, because it broke to 470, most technicians will tell you we're going to 5. Okay, and that's tied to this 1, 2, 3, right? So if you said 3, you basically saying interest rates are going to 5, right? If you said 2, you are basically saying interest rates will stay above 450, right? So this is you're saying that interest rate will stay above 450, right? So interest rates will be above 450 if you say 2. If you said 3, you're saying interest rate will be greater than or equal 5 and stay there, right? And if you're saying 1, then you're basically saying interest rate will drop to 4.0, right? Right. So whether you're investing into QQQ, Spiders, Bitcoin, whatever you're investing in, interest rates are probably the most important piece of information right now. And we're talking about 10-year yield, right? 10-year yield. 10% interest rates yield. Should I call it Y or should I call it probably Y yield, right? But I think you guys understand what I'm talking about. If you don't, let me know, it's important. So you can say 1, 2, and 3. You can say yield 4, yield 4.5, or yield 5, right? If you said 3, you can't say yield is going to be at 4, right? That doesn't make sense to me. But if you say yield, Vlad, yield is going to be 5 or 5.25, or you know, Fed is going to start hiking rates, then you're saying 3, right? If you say no, yield is overdone, we already cut 100 basis points. We're probably going to cut another 50 basis points this year, so yield should be at 4, right, or 3.5. So then you're basically saying, you know, 4.5, you're saying 2, 3.5, you're probably saying 1, right? So still bullish on gold. I mean, gold, silver has been better, right? People are hiding in the hedges, right? Gold, silver is doing okay. Healthcare is doing okay. We have utilities actually overdone, and looks like they're trying to rebound. So people are hiding in interest where they're getting yield, right? Treasuries, utilities, XLV, gold, energy, right? Energy is best performing sector probably year to date because it was so oversold. So energy is doing really well and continues to go higher. 2, 2, 2, 2, 2. All right, that's funny. Everybody said 2. Nobody said 1. Nobody said 3. Wow, that usually doesn't. Is Kevin not here? Kevin. Oh, Kevin didn't say anything. I assume Kevin says 4. Sorry, Kevin. I just wanted to pick on you today. Sorry. But Kevin could be right? If Trump comes out and says, Canada is part of the United States now, and they invade, Panama, then 4, then 4. But we hope that's not going to happen, right? But it is possible. It is possible. Okay. Any questions? So most of you said 2. I agree with 2. So okay. So if it's 2, and QQQ kind of already retested 500, right? We basically gave up all of the gains since July, end of July, right? The peak of this rally. So market hasn't gone anywhere in the past 6 months, right? So QQQ didn't go anywhere in the past 6 months. It was higher, it was lower, but didn't go anywhere. If you invested on July 11th, you're flat in QQQ. And we said 2. So if you said 2, then you basically cannot. And we already kind of pierced through 580 briefly. But if next week we stay below 580, then the next level is 200-day moving average. I don't know where it is. Maybe it's 570, maybe it's 560, maybe it's 555, somewhere in this 200-day moving average. Then that means you want to be market neutral. Most of you said 2. You need to be hedging your positions, right? If you have stock, maybe you sell calls against it, maybe you buy put or put spreads. I have position in QQQ put spread that I'm trying to close. If you don't feel comfortable trading options, which I know a lot of you do not, then you buy inverse ETF. Market is going to be down 1.5%. SH is going to be up 1.5%. If you heavily invested into high beta stock, maybe PSQ, right? Your QQQ position will be down 1.5%. Your PSQ position will be up, right? So if you're heavily exposed into the high beta stocks, then potentially maybe one of these 4 positions should be PSQ, right? And I would look at overall portfolio beta or delta, right? If you're trading options, you look at the overall portfolio delta, it should be neutral. If you set 2, it should be neutral, right? 0, market neutral. If you look at the beta, probably should be under 1, your portfolio, right? So if the market right now is down 1%, right, 1.25, and your portfolio is down on 1.25, then you just go to this negative visualization and say, okay, well, this is great and wonderful. We're down, let's call it 5%. We could be down 10%, right? It's healthy for the market to be down 10%, right? Not healthy, but kind of work off its excess and some of the fears. 200-day moving average. So we could be at 550, right? We're down 5%. Why not another 5%? All you need is VIX expiration next week. You need higher inflation data and JP Morgan complaining about, interest rates and dollar, right? Strength in dollar in the past 3 months. And you're at 550, right? It's just simple as that. But you don't know, right? Or if it's all positive news, then we're back to 610. So you want to hedge, right? The bottom line, you want to hedge and be, for one long position, have one short position. Right? And if we do get at 550, you get more bullish. If we get back to 600, you get bearish, right? You realize that every tweet from Trump or from Elon Musk can move the market, right? Can move the market. Okay. So what do? So Delta Airlines. So in Elite Circle, so we have different subscription. In Elite Circle, I trade both stock and options. So you can see today I'm trying to get out of this Delta Airline credit, which is going against me. So you have example of earnings strategy, right? I didn't think Delta Airline, especially in the current market condition, will jump 12% when the market is falling apart. Delta Airline all of a sudden is, up 10%. Unusual, but apparently January is not a good time to be short volatility on Delta Airline and QQQ. So Delta Airline is an example of market neutral strategy, which went wrong because, you know, Delta Airline, the expected move was average of 5%. Last January it was 9%. Today it's 12%. Right? So that's, you know, but you are limited in your losses, right? I know that my losses cannot be more than the difference in strike. And I've been hedging portfolio, right? I had January position, I closed the January position, bought at $1.74, closed at 229, no, sorry, 245. Right, so I bought $1.74, sold it at 245, and then I bought 229, trying to close at 340, close to 340. We're close to that today. Probably by end of today, I will close my February position because it's 520, 525. Market is oversold. It is oversold, right? Going back to Christopher questions, yield is overbought, market is oversold, but that doesn't mean that it cannot go, right? The pendulum doesn't mean, right? Physics. You know that pendulum swings to certain, you know, maximum and minimum according to physics, but if you apply force to it, that doesn't mean it cannot go further, right? The pendulum can swing further. So you just need to apply some energy to it. What can be the energy? It could be Elon Musk tweet against government in Britain, or cause, you know, the resignation of British Prime Minister, right? The Canadian Prime Minister resigned, British Prime Minister resigned, and we have this full-blown, you know, tariff war, and then that's not good for the market. So continue to hedge, continue to hedge. So this is an example of hedges in QQQ. I think Tesla is a good example. A lot of people do invest in high beta stocks, whether it's a Pelletier or, you know I own Q. A lot of people were in supercomputers, super microcomputers, right? You know, you have these elevator up, elevator down stocks. These are the most popular stocks, especially if you're new to trading. You gravitate toward elevators up, right? Usually it's escalator up, elevator down, right? This looks like elevator up, elevator down. No, it's still escalator, right? It dropped 40% in one day. It didn't rally 40%. But, you know, the only way to hedge to these, you know, escalator up, elevator down is, you know, you buy small shares of Tesla and then you hedge, right? And then you hedge with the put spread. So this is an example of, you can do merit puts, you can do cover calls. There's different strategies that you can execute to hedge your stock positions. Any questions? One of the better performing sector is energy, continues to outperform, right? So energy today, I mean, pretty large reversal, looks like it's a little bit overdone, but nonetheless, it's one of the best performing sectors is XOP. So energy is doing well. Small caps are, looks like starting the wave C, right? We talked about wave C. I would keep, small caps are most sensitive to interest rates. And you have these kind of popular patterns for pullbacks, A, B, rebound, sometimes 50, sometimes, I mean, didn't even get to 50. And then you have C, right? And we went from 245 to 220, 25 points drop. We could drop to 210 to 05, right? Kind of, that's the question, where does the C end, right? Nobody knows. Right? Well, it depends on the news next week. But nonetheless, it broke through November. You know, it's trading at November lows right now, and we still didn't drop more than 50%, right? So it's still kind of a bullish momentum, broken uptrend. Obviously, it's a broken uptrend, but you know, we're trading at this level, right? This is the level we're currently trading. So we'll see if that level holds, right? 200-day moving average. Okay. So that's small caps. What else? So this is a lead circle. Stock forecast toolbox has been a good kind of a guidance where it tells you, you know, when do you want to be bullish or bearish. Right now it says market neutral. which is kind of what we said too. And even for the next 10 days, it sees market neutral. It doesn't see a break below 580, right? At least model doesn't see, right now, there is no evidence that 580 is going to be broken, right? It doesn't see that momentum. But if you zoom out, actually, if you zoom out, and pull to 6 months, same thing, sorry, last month it showed 565, right? This month it never, so it doesn't see momentum below 580 right now. So that means from the technical perspective, market is extremely oversold, right? That 5% drop, my basic model says this is good enough. But model doesn't know about inflation, it doesn't know about, you know, Trump tweets, it doesn't train on it, doesn't learn. So we shouldn't be down 580, but we do realize that we could be at 560 if there is, you know, if there's new negative news, negative energy applied to the system, then we could be dropping to 560. Joseph's thoughts on OKE. I'm a little bit disappointing. I'm long OKE. I'm long on energy. I mean, obviously it's doing better than the rest of the value stocks, right? Value stocks in general, across the board, whether it's energy or anything else, are a 200-day moving average. So OKE is doing better. It's not that far from 50-day moving average. It's not making new lows. So, but, you know, I think next the catalyst is going to be earnings, right? We're going to have this earnings season, and we'll see how well the energy companies are doing. But for now, the best performing sector this year is energy, right? So, I mean, one of the triggers was when we were talking about this back in December, I said it's seasonality. So let's look. Okay, so OKE. January is usually one of the better months, right? You have April, January, November are probably the best months in OKE. So, and that I think goes for the most energy names. So usually XLE, January, February, April are one of the better months, right? And then usually December is not so good, and August is not so good. So I think between January and April, I think energy goes higher, right? OKE probably follows that trend as well. I forgot about, so let's look at SRE. We had a pretty bad December. Usually average is, I mean, neutral, I would say. January is one of the worst, right? We haven't had that, but you know, January of last year also was pretty bad, but probably the worst is already factored in. We haven't had 8% down or 2010. So obviously it's overdone. Let's see, is utilities as well? XOE. Yeah, utilities usually January is also bad. March is one of the better, March, April. Okay. So SRE, OKE, we could, you know, I mean, energy should continue going higher. SRE, probably the worst is behind us, and you know, March and April should be a better time. Thank you, Joseph. Any other questions? We have a lot more people. Carl, Christopher, George, Hamir, John, Joseph, Kevin, Mark, Peter, Tony. Welcome back, guys. Thank you for participating. Fred, Bob. All right. What else we want to talk about? 10:07. Let's just go through sectors and see what stands out. Materials, home building is kind of in free fall, right? If you want to see a chart in free fall, that's And that's concerning, right? How far can GDP grow without home building activity and mortgages at 7% or 8%, right? So that's not good. And you can see it in materials, you can see it in home builders, metals and miners, same thing. China, same thing, right? Kind of in free fall. China already gave up all of these gains from this extra stimulus. Industrials are also 200-day moving average along with other value stocks. Dollar is extremely strong. Junk bonds are stable, a 200-day moving average, but stable. Corporate debt, the spread are still stable. No signs of liquidity issues. REITs are in free fall, sensitive to interest rate, right? You have this wave A, B, C, identical to small caps, right? Identical to small caps. Healthcare doing better, right? Again, oversold, just like energy, it was extremely oversold, and now people are gravitating toward it. And silver, right? Somebody asked about gold, silver, also one of the best performing sectors this year from sharp oversold conditions from the end of the year. And you can see Asia is not doing any better, right? India was one of the popular 2024, 2025 best ideas of 24-25 from very well respected, money managers, and India is basically flat in the past year. Apple below 50-day moving average. So I would watch that level, right? If Apple dropping below July highs, then potentially QQ can follow that suit. Microsoft has been one of the weakest AI stocks below 250-day moving average at 416. Google is one of the strongest stocks, very strong, above 20-day moving average. So Google is doing well, right? It was one of the worst stocks in 24 from the mega, magnificent 7, and now it's the best. Netflix sharp drop below 50-day moving average. Nvidia sharp drop below 50-day moving average, getting to the support level 130. LA Lilly kind of can recover from the negative news. Amazon down 2%. Tesla down. OKE is down. Texas Instrument. SRE is sharply down. Twilio. All right, Delta Airline, let's go. And I'm gonna hedge. So one way to, that asks that here. I don't know why I didn't say it, but one way to hedge your spread is to buy Delta Airlines stock, right? Not ratio, I would do kind of a ratio spread, right? Because it could drop to 65. So I have 65, 66 call spreads. So one way to offset is to buy the stock, maybe small increments of stock. So I'm gonna trade stock and send alerts so people know Delta Airline buy. Let's see. So if we jump to 69, that's $2. So for 100 shares, maybe I would buy 25 shares of Delta Airline. Right. So this is one way to defend. I mean, with the assumption that Delta Airline is going to stay above 65. So if it drops to 65, okay, I made money on my credit call spread and credit put spread. So I collected $25. But the stock is going to be down, $2. Or if the stock jumps back to the, 69, right? Then, what the 25 cents that I lost on the shares, I will make up in the move in the stock, right? So obviously, if the Delta Airline drops to 62, because we have market pulling back, then yeah, I'll make money on the options, but I'll lose money on the stock. But assuming the Delta airline is not dropping below 65, then this is one way to hedge, right? And this is kind of what we do in the live trading room. So this is an example of both stock and options trade. Any questions on Delta Airlines stocks? Let me just bear with me. Let me just send an alert. People want alerts real time, so and you guys can think about the questions. Okay, so let's see. Save, review, send. All right, so that's earnings trade. And now we need to manage. I would need to manage this, right? If it jumps to 69, close the stock. If it drops to 65, close the short call or let it expire worthless. Drop below 65, close the stock. So that's my thoughts on Delta Airline. Any questions? All right, 10:15. What else do we want to talk about? Services, sorry. Okay, so stock forecast toolbox, one of the tools, right, that you can use on the Yellow Tradespoon platform. Gives you trend analysis and long-term predictions. We saw that. The signals we picked from Active Trader. So we have Active Trader, Weekly Trader, and Monthly Trader. Those are picked services. These are signals, right? So for today, there were no bullish signals, but there was a bearish signal, Disney, right? And John, is John here? He actually traded that, right? So if you're looking for bullish signal to trade or bearish signals to trade, these signals, the goal is to outperform the market, outperform the sector, right? So market is down. How's Disney doing? And Disney is down too. Yeah, more than S&P, right? So that, you know, the model is looking for weaker stocks, for stocks that are broke their key resistance support levels, right? And you have bullish and bearish ideas. And we've had very few bullish ideas in the past couple of weeks. So just that alone, I think is a great service to have. Because if you see no bullish signal, that means we are either in a down market or sideways market. If you start seeing a lot of bullish signals, then you know you have a strong momentum and continues. And then you can obviously trade these signals. So you have Active Trader, Weekly Trader. It gives you stock ideas or options. Some people say, well, Vlad, I don't trade stocks. or I prefer leverage, I have smaller account, I prefer leverage, then we can say, okay, buy put, right? If you have weekly options, buy, week 2, week 3 puts, right, in the money puts. But the entry point and exit points are the same, right? Whether it's a stock and we tell you to, at what point to sell, same thing, entry 1, entry 2, using the stock price. So $114 put plus $85 would be 115.85, where you would enter your position, or 118.25, depending on market conditions. If you see market down, you're probably not gonna be able to get this price, so you have to use yesterday's close. So 114 plus 425, 118.25. If you bought at 118.25, okay, you're up 40 cents, right? You're up 40 cents. Plus minus, I mean, it's delta, different deltas, but that's the idea. So you have both stock and options. I encourage you to use entry 1, entry 2, kind of split the trade into 2. Right? Some people use option ladders, some people use dollar cost average, but the idea is the same. Not to risk, first of all, the first rule is to only have 4 active positions at a time with maximum loss of 2.5%, right? But if you're somebody who is new to trading, or if you're new to Tradespoon subscription and you're not sure if this is the right fit, or you're still not a confident trader, I would say, okay, don't have more than 4 positions and don't risk more than 2.5%, and then break the trade into 2. Whether you're doing, short-term aggressive trader, or you're doing kind of, few weeks, few months type of trades, right? Weekly trader, you're looking for 2.5% move in stock, right? 333 to 339, right? So ETN at 340, you think it's oversold and this is the time to buy. Okay, great. You buy 342, but you don't risk 2.5% if it drops to 335. If it drops another 2.5%, you only risk, 1% here and 1% of your portfolio here with 2 different entries. And that's the important concept, right? Kind of dollar cost average on the pullbacks. And then this way, if you do get stop out, you haven't lost 2.5%, you lost maybe 1.5%. Any questions on the active trader, weekly trader, and monthly trader? Elite Circle, I gave you an example, both stock and option trades. You can participate in live trading room, morning bell, closing bell. We have Trader Log, where you can see all of my positions real time, and then you can sign up for alert, right? SMS alerts. We have our own tools, right? People ask me, why do you use bar chart? Well, you want to use different signals, right? You don't want to make a decision on, seasonality alone. You don't want to make a decision just on gamma positioning, right? There's few factors you want to consider, and some people, I think seasonality is important. I think, gamma positioning is important, something you want to look at. But we have our own seasonality chart, basically showing you that, January usually is one of the, January sets the trends for the rest of the year, right? January last year was also volatile, right? You can see if you go back to the January of 24, you want to zoom into it. And we have 5% pullback or more. Oh no, 3% pullback, a little less. So we did have a 3% pullback, but then, choppy market, and then after the expiration, right? After the expiration, there were no negative news and the market continued to rally, right? Because usually February and March are strong. Now we have 5% pullback. And, if we have positive news after the CPI and PPI data and expiration, right, at middle of January, that's when the rally usually starts. If we have negative news, that's when the pullback usually continues. So that's kind of where we are now. How was it before? Let's see, 2022, how was it? 2023 was very strong, so it's not a good comparison. 23 was just kind of a one-way street. But we did pull back, right, on that scare of regional banks. Right, so when regional banks default, obviously, can cause 10% pullback. So far, regional banks have been out of the news. But if they're going to get back in the news, obviously, this pullback is going to accelerate. Okay. So that's the research on seasonal. Right, you can use standard like probability calculators. Right, trading is about probabilities, right? Distribution of possible outcomes. There's no such thing as, you know, oh, market is going to go up or market is going to go down next week, right? You don't know what's going to happen next week, but you have distribution of outcomes. You can say, okay, 580 we're overdone, right? 596, 600 we overbought, but that doesn't mean we cannot drop, you know, 2 standard deviations. I don't know, 582 is probably not 2 standard deviations, but you know, 560, 550, yes, right? So just because you move 1 standard deviation, that doesn't mean you cannot move 2 standard deviations, right? So we went from 610 to 580, that's what, 30 points, 580 to 550 would be 2. Any questions? All right, so we talked about screeners. If you only want, so these are the pick services. If you just want to follow my trading, then Elite Circle. Elite Circle gives you access to all of these tools. But if you don't need picks, you just want to say, Vlad, I just want to see what you trade, and this is good enough for me. Then you can have Shadow Trader. You will see all the trades. Or if you don't care about options, then you can have you can sign up for Robo Investor, or if you just want spreads, options or option spreads, then Spread Trader, right? So we have different subscribers want different things. So this is something to also consider. All right, 1024, any questions? That's all I have. We do have, I encourage you, if you haven't been in live trading room, we have recordings. You can watch the recordings. And I encourage you to participate in YouTube. We have a YouTube channel where we have live trading room every Wednesday, and we have a lot of free content. So all of the webinars on iron condors, options, spreads, technical analysis, you can find them all under event recordings, large libraries. I've been doing this a very long time. What is it? Almost 2012, so 13 years. All right. So there's a lot of recordings in the past 13 years, and then newsletters. You get newsletters with trade ID and signals, and then study guides. So a lot of free content, which you can also explore. All right, thank you very much. Have a great day. Bob, welcome back. Thank you for participating. Joseph, thank you. Have a great day. Bob, anything I need to cover? I think you came in later. Anything you wanna go over? Yes. All right, Bob, let me know what. I mean, basically, the gist is, again, nothing has changed. It's all about interest rates, right? Good news and interest rates jump, right? So we need inflation data next week. As long as the interest rates are above 450, we're going to have a choppy market. If it reaches 5%, we were at 480 today. If we get, and dollar was at 110, right? If the dollar continues to rally, if the yield continues to rally, or not even rally, even stay above these elevated levels, market is going to be choppy, right? And everything, whether it's small caps, value stocks, regional banks, everything is sitting on a very key important support levels, and we're going into expiration next week. So next week, we need positive news from banks and positive news from inflation. That will be a recipe from oversold bounce. If we have net negative, inflation is higher than elevated, banks complaining about strong dollar or high interest rates, and then you have a sudden drop in the market to 200-day moving average. I would be cautiously optimistic, right? Last January, we had a choppy market that resolved itself to the upside. This year could be different, right? Plus, we have new administration. So it makes sense to hedge, SPY QQQ support, yes. So spiders, main level on spiders support is 580. We briefly took it out, but you know, closing is important. But if we're going to be at 579, 578 next Friday or lower, that opens the door to the support level, which would, at this point would be 200-day moving average somewhere. So somewhere between 560 and 570 is next level after 580. I mean, I think it's going to hold, but a lot of it depends again on the. I'm making an assumption that earnings is going to be better than expected. Inflation is not increasing, and this is just climbing wall of worry about new administration. But if the data supports the worry, then yes, then the pullback will accelerate. So spiders 580, the line in the sand. Next one, I would say 565 is this guy. Right, so this level is the next level I would be waiting. I mean, right now we're 5% down, right? Next level is basically being 10%, somewhere between 5 and 10% down. And somewhere 560, 550 is the 10% pullback. QQQ, I mean, same picture, nothing different. We already touched 500 or got close to 500. That's the line in the sand, is 500. That goes back all the way to August. After 500, 480, right? The next level would be 480, 200-day moving average. So those are important levels I'm watching. And the problem is right now that yield already broke through 470, right? So, and market follows the yield. So yield kind of marginally 478. We were at 474, 470 high was back in April, March. The last pullback we had March and April, 10% pullback in 24. We were at high was 4.70. So we're right at that level. So if this thing, if the yield gonna continue approaching 5, we're gonna have that 10% pullback. Rates are up due to inflation, yes. So rates jumped because unemployment is better, right? More jobs got created, productivity increases, wages are stable. So fear that people are going to spend money, fly on Delta airline, and inflation is going up. Hope 5.5. Yeah, I mean, I don't know if we're going to take it out today, but we have PPI, CPI data on Tuesday, Wednesday. We have expiration. So next week is important. I would say it's a key week. Next week, by Friday, we want to be above 580. If by next Friday we're below 580, then potentially you can have another 5% pullback. All right, Bob, welcome back. I'll see you at the closing. Well, no, I'm not going to see you at the closing bell, but Keith will see you at the closing bell. Thank you, guys.